Welcome to Borak Bursa, about everyday Malaysian finances. So today I have on my right Mr. Zen Chow. Welcome. He's a old friend. We've known him more than 10 years. He's also become one of Malaysia's leading tax guru. So really today we will talk about taxes Malaysian finances, and of course Chuck here, who's representing the average guy. He's going to be asking very average questions.
Who always forgets to log his taxes until like someone reminds me. Yeah. Hey, do they really find one when you?
Of course. Of course, what?
Because this year finally I missed it. I actually was late this year.
Congratulations for paying your first fine.
But but can't you like go and say hi, Nigo, sorry bro, that kind of thing?
They always say that, as long as you commit an offense, there's no excuse. You gotta pay. Right. I mean, but you can try to appeal for a lower penalty if they penalize you a high penalty. But usually, if it's the first time, they will give you the minimum.
Not sure whether it's the first time or not.
But
actually, I've never been fined before though. I'm pretty sure that I filed late once before, but I don't think I've been fined.
But is it like, someone where end of the year they get 50% off?
How I wish. No such thing. Never ever. Okay. Never before in my life I've seen, there's a discount for the penalty for late submission or non-submission of your tax filing.
Oh, late submission or non-submission. Non-negotiable.
Non-negotiable.
So what is negotiable then?
I mean, it is not really non-negotiable. Of course, usually if it's the first time, it can be a compound. And we always say compound is minimum 200. So if they give you a 200 ringgit compound, that's the minimum. So nothing to negotiate.
Okay.
If they give you something more than that, you can try. You can try to...
Can rayu
try to appeal and say, hey, this is my first time. Give all the excuse reasons. Sorry, nice. Because give all the reasons. All the reasons, why have you not filed, probably due to busy schedule. Say you keluar negara ke
relative passed away.
But you
dog
can
ran away. Okay, got it. But actually, can we back it up? Then, how did you find yourself in this position that you wanted to be one of Malaysia's top people to talk about taxes?
People always say tax is a very boring subject. I don't know whether both of you agree.
It's boring until you get fined.
I agree. That I agree. Yeah. But I always say that tax is like, I always use this when I tell people who do not know about this industry, do not know about this career, right? Especially graduates or students, right? They say, what's so interesting about tax? I always say tax is a hybrid of accountant and lawyer. Why? You need to deal with numbers for sure, right? Not knowing the numbers, you can't actually file your tax correctly. So you need to deal with the numbers, you need to deal with money, because that's what accountants do. And at the same time, you need to deal with the law. You need to deal with different types of acts, Income Tax Act, the Sales Tax Act, Service Tax Act. Now we have got more different types of taxes, and need to look at all the rulings, and you need to find all the selok belok, on how we can legally help our client to save tax. So that makes things very interesting. Because in the end, the client would appreciate you when you help them save money. Right? Although I can't help them make more money, but saving money means make more money.
Right.
Can you give me an idea? Like, for instance, the average person who just goes in and does their taxes, right? How much can you actually save by optimizing the way that you submit your income?
Now, obviously, how much you can save really depends on what's your tax bracket. Because you see, in Malaysia tax system, especially on individual taxpayer, it's on a progressive tax rate system. In other words, the higher your income is, the higher tax rate you'll be paying at. Right, so lower income, you pay low tax, right? So we say, okay, let's just take on average, like you're paying, say, about 20% tax, okay, 20% tax rate, and that makes you probably pay about like 3,000-4,000 ringgit a year. Let's just say that. If you know how to optimize all the tax reliefs, all the tax savings, I would say easily you will save at least 10-20% of what you have been paying. As compared to those who do not know. Because I've done so many different tax filings for my clients, and I've seen some clients, they don't care. They practically don't care. They say, okay, you just file my tax for me, whatever you see, you just put in as my tax relief. But some really go each and every tax relief and try to make good use of that. And when I compare like same level of income, the other person would easily save like 20% of what, the other person is paying.
That's a lot, actually.
20% is a lot, is a very big TV, depending on how much you earn.
Well, I guess it's a huge topic for wealthy people.
Yeah.
Right, because it's a significant amount. When you talk about absolute, if you talk about some guy with a net worth of maybe 20, 30 million north of that, then you really actually, it's not boring anymore. It's something that it's almost mandatory you have to do.
Yep, true.
So then on that note, are there more optimizations for a salaried person or for a person who owns a business?
Definitely a person who owns a business. Okay,
Right.
why? Let me just explain why. You see, if you're a salaried person, the only thing I would, not to say the only thing, like the things that you can really take advantage of to save tax is always your tax relief.
Yep.
Right? Personal tax relief, and tax reliefs are limited. There are not many. Okay? But when it comes to people who are doing business, basically we try to play around with business expenses. Okay? Because we know when you do business, your income basically comes from business income.
Yep.
And when you have business income, you have business expenses to run your business, right? And business expenses are mostly tax deductible. So what we actually want to plan is that, how we can make all these expenses tax deductible. And when I say tax deductible, that means it reduces your taxable income.
Yep.
Okay? So, and you have so many different types of business expenses. So if you know what are the things that are tax deductible, you try to incur more of these kind of expenses, and you don't incur those that are not deductible, that makes you save a lot.
So someone once told me before, like even when I was a salary worker, this is like 15, 20 years ago, right? To start my own sole proprietorship and get my company to pay my sole proprietorship instead of paying me. Is that a good advice for any person who's under a salary?
I would say no difference. Okay, why? See, this is a big misconception, a big misunderstanding by a lot of people. Now, just like you did mention, instead of paying me salary, why don't I set up a sole proprietorship and don't pay me, pay my sole proprietorship, right? Now, one thing that most people do not know is that sole proprietorship equals to individual income, which means whatever you earn from this sole proprietorship goes back to your individual income, and you'll be paying tax at the same tax rate. It's
Right.
the same individual tax
No
rate.
benefit.
Yeah. And if you say, hey, but I have got, just like I was saying, right, you have got expenses.
Business
right,
expenses,
you've got
yeah,
business expenses,
yeah.
right, but you really have to incur that. I mean, if you don't need to incur such expense, why incur that, right? Unless you say, my business model, requires me to incur a lot of expenses before I can do that work. Right, then it makes sense, because
Like a freelancer.
yes, like a freelancer, for example. But if I am really a salaried employee, I don't have to use my own resources, and whatever that you pay me, instead of paying me as an individual, you pay my sole proprietorship, basically it's the same, because I would have no expenses that I have to incur on my own.
Right.
Yeah. But the difference is when you set up a company, a Sendirian Berhad,
Sendirian Berhad, right.
or an LLP, a limited liability partnership, because that would be a separate entity,
Yes.
as compared to an individual. And this entity, which is the LLP or the Sendirian Berhad, is paying at a lower tax rate as compared to an individual.
Right. Because it's also tiered, right? For the Sendirian Berhad level.
Only if this company qualifies as an SME, small medium enterprise. I mean,
Right.
small medium enterprise is the layman term, but of course there are a lot of conditions over there.
Yeah.
Let's just say if this Sendirian Berhad does not qualify as SME, the highest tax rate is 24%.
Right.
Flat rate, one rate only, 24%. But if you compare to an individual's highest tax rate is 30%. But I mean, by looking at this, if you are someone that is really earning a lot,
Yeah.
that's a 6% difference,
Yeah.
between a Sendirian Berhad and individual.
Right.
And of course, if you can make that Sendirian Berhad qualify as an SME,
Yeah.
you have 15% for the first 150,000
Yep.
chargeable income. Next 450,000 will be at 17%.
Right.
That's 600,000 already. Anything above 600,000 will be taxed at 24.
Right.
So, and then you see, hey, I'm really paying lower tax as compared to earning it as an individual.
So, but coming back to how would Sendirian Berhad be classified as SME? What is there very clear rules around this? Or?
Okay, of course, SME, like I was saying, it's a layman term, right? Because if you really look into the Income Tax Act, there's really no such definition.
Okay.
There's no definition of SME. Okay,
Yeah.
so what this thing is trying to tell you is that if your company is not a big company,
Yeah.
you qualify for a lower tax rate, and
Right.
of course there are criteria to meet, lah.
Okay.
Okay, so basically the most important thing is that the company's paid up capital of ordinary shares cannot exceed 2.5 million ringgit. Okay. All right, cannot exceed 2.5 million ringgit, and the annual revenue of the company cannot exceed 50 million ringgit.
50 million.
50,
ah.
50.
50 lah.
50.
That's a pretty high threshold. I
Yes,
mean,
yes, yes.
Yeah.
So if you can actually satisfy these two criteria, of course, these are the two major criteria. There are more very fine details which I probably don't want to mention too much. But if you can fulfill these two, basically you can make that company enjoy the 15% and 17% lower tax
And
rate.
do you have to apply this with?
No,
no,
you
it's
don't
just-
have to.
It's automatic.
It's automatic.
Right.
Oh, right. Okay. Okay.
Right. So your accountant just needs to know, your auditor needs to know when they submit your
Yes, that's right. That's right.
your
Right.
P&L. Sorry, your audited reports. Right.
Okay. So going to register your Sdn Bharat.
Yeah. But actually, I had one more question that is a bit controversial, but I probably need to ask lah. Which is, like a lot of people do put expenses under like freelancers and stuff like that, right? How have you ever heard of cases where the government actually like checks, to see whether these expenses are legitimately tied
Of course. You see, I was telling you that a lot of people probably would think, hey, I would use a sole proprietorship. I'm a freelancer.
Yep.
So you know what? Pay my sole proprietorship instead of paying me as an individual because I want to take advantage of all the business expenses and I start throwing in a lot of expenses. Now, a lot of people do this mistake. They would throw in all expenses that they incur, whether it is really for business or whether it is for personal use, right? So when you start throwing in all your personal expenses into this so-called business, this is where when you get caught by the Inland Revenue Board, all of these expenses are not supposed to be deductible.
Yeah.
And you thought, hey, then I just, don't deduct lah, just pay back all the additional tax. No, you gotta pay penalty. And penalty can be as high as 40%,
Right.
Yeah. So that's the danger when if you don't understand, what are the expenses that are deductible, that's really genuinely for business, and you start throwing things into your so-called business.
So basically, can I summarize that into make sure that your story checks out lah, right? And jangan terlampau lah, basically.
And you have to be able to prove lah. I mean, put in this way, you have to be able to prove that, hey, this is really for business, it's needed for business.
Yes.
And you have all your trails like maybe correspondence, emails or whatever.
I have to rush to my appointments, and that's why I need my Lamborghini,
You can still rush to your appointment with a Myvi.
Not fast enough. I need to get there faster. Yeah.
King of,
And it has to be yellow,
king of the road lah, Myvi. King of the road.
Yeah. Okay. No, I think that's a very clear explanation. Shall we move on to some topics about next year's changes in taxes?
So we're gonna release this podcast closer to the new year. So of course now it's 2025, but we're talking about 2026. Of
Happy
course,
New Year, guys.
Yeah, Happy New Year. And I guess whatever we're gonna be discussed, if you're a bit smarter about your tax planning, we will see those benefits 2027. Right? So it's planning requires time lah.
Yep.
That's what I'm
True.
saying. So listening to this podcast today, and if it's early in the year, it's good for your next year planning. But 2025 is say over, so you can't do anything about it, right?
Yep.
I guess that's where the penalties will come in if you think you can, right? Okay, so
I think one of the biggest ones.
okay,
the
we're gonna
biggest
talk
changes-
about biggest one, and this has always been something that initially when it first announced caused a bit of confusion.
Yep. And a lot of controversial. A lot of people were saying this is not fair.
Correct, quite controversial.
Were those people rich or?
Those that are rich but not too rich. I mean, I would say those ultra rich ones, they basically have no say. I mean, they're okay with this.
Right,
Seriously,
right,
as far as I know, those ultra rich people, they are okay with this proposal. But those that are rich but not too rich, they are really complaining this.
Yes. It's unfair lah. And I guess the question here is that, so was it last year or last year, government has come out and said that any dividends that are paid to individuals, so dividends, I think, kind of, I was thinking, when dividends, I think of, stocks. You buy stocks, you have dividends and that kind of thing. And I think that's why this tax was initially probably designed for that. But then a lot of entrepreneurs who run their own Sdn Bharat or Sdn Bharats, right, often also pay themselves a low salary, but they pay themselves out as a dividend at the end of the year.
That's right.
Quite common, right? A commonplace. So the government has proposed that after you pay tax on your company, or whatever rate it is, if you're paying a dividend to an individual, anything above 100,000 per annum, you get another 2% tax.
Yep. For the dividend in excess of 100,000.
Excess of 100,000,
in
right?
excess of 100,000.
So if you're paying 120,000, then it's minimal lah. Yeah.
Well, 20K.
Yeah, you
times
get
2%,
2%. Yeah. 2% of 20K.
$400 lah.
Yeah, 400 ringgit.
Okay, nothing lah, right?
Okay.
Small lah, alright.
Yeah.
Okay, but I guess so. I think one of the I remember when I read the article came out, I think they were pushing for high net worth individuals like a public bank founder Teh Hong Piao passed away, then his net worth was passed to his kids, who then received something like 200 million in dividends a year, because as being a big shareholder in a bank lah. So then it was very squarely aimed at the rich lah, the rich paying their fair share. So 200 million minus 100,000, so 199 million, you pay 2% of that. So that's quite substantial for revenue lah. And I think they're trying to propose this so that it doesn't hurt the rakyat too much in terms of balancing the taxes being paid by citizens.
So then my question is, if it doesn't, harm the majority of rakyat, which I think we can agree that it doesn't, right? Just from a demographic perspective.
Yep.
Why hasn't this been done before?
Okay, let me explain a little bit about the history of dividend.
Okay.
I don't know how many of our audience, would be old enough, to have received dividend like since long ago.
Oh, no.
Okay. When I say long time ago, that means, we're talking about more than 10 years ago.
Yeah.
Because last time, dividends received by an individual is not tax-free. Right now, I think a lot of people know that the dividend that you receive is called a single tier dividend. It's all stated on the dividend voucher. That it's single tier. Single tier dividend means it has been taxed at one level, and that is just that one level, which is at the company's level. So the company has paid tax for its profit. So this profit has been taxed. So there will be no more tax when the company distributes the dividend, because it's already profit after tax. So that's what we mean by single tier dividend. I mean, before this dividend tax is being brought in. But if you go back to the history of dividend, last time, dividend is not tax-free, which means as an individual, if you receive dividend from a company, whether it's listed or non-listed, you have to declare it in your own income tax return form. You have to pay tax. But you will then again say, but the company has paid tax. If the company has paid tax and now you have to pay tax again, it will be double tax, right? So the system last time was on franking credit system, which means you receive a dividend that has been taxed. You get to claim back the tax portion that the company has paid. Okay, give you an example. I'll give you some numbers, simple numbers. Let's say company is earning a 1,000 ringgit profit. Let's make things simple. 1,000 ringgit profit, and this company pays tax of 24%. So the profit after tax would be 760. Okay, company decides to pay out everything. All right, 1,000 ringgit profit, I'll pay out everything. Of course, the profit after tax is 760. I'll pay out all 760 to my shareholder. So shareholder will receive 760, but in the dividend voucher, it will be declared as 1,000 ringgit gross dividend, 240 ringgit tax, 760 it would be your net amount received. Okay. So this individual would have to declare 1,000 as his income for his own individual tax return form. But he gets to claim back the 240 ringgit when he files his income tax return form. Okay. So you see, if this individual is paying tax, let's say at 20%, the 1,000 would attract a tax of 200. But I get to claim back 240.
Right.
That means whatever tax that has been paid by the company, I get to claim back from the
Which
government.
means you're not paying the tax.
Which means the company's tax, the tax that has been paid by the company, is now a credit to the shareholder. Shareholder gets to claim back. So effectively, this 1,000 ringgit is only taxed at 20%, which is the individual's tax rate. Okay. So that is the old system. I pay
remember
tax.
This was the HK3 form or something, right? Is it the one?
Yes. I cannot really remember what's the name of that form, but you have to fill up the form.
I remember filling.
Okay, so this was the old system. So a lot of people then, if I'm paying tax at 20%, obviously I would declare my 1,000 ringgit dividend lah. You know why? Because I get to claim back money, right? I declare 1,000, I pay tax of 200, but I get to claim 240. I earn 40 ringgit. Right? So what if my tax rate is higher? What if my tax rate is 30%, let's say? If my tax rate is 30%, if I declare this 1,000 ringgit, I'll pay 300 ringgit tax, but I get to claim back only 240, right? That means I'll be paying more. So a lot of people would then say, might as well don't declare lah, Might as well just leave it since I'll have to pay more. So that is why the government then changed it to single tier. They say, okay, let's make things easy. You don't have to declare anything. everything will be borne. I mean, tax has been paid by the company, so it becomes tax-free to the shareholder because it has been taxed. You don't have to declare it one more time. So that is when they introduce single-tier dividend.
Okay.
Right? But they found out there is a
Loophole.
There's a I wouldn't say a loophole. What do you call it? An unfair, or maybe you call it not fair. I mean, tax has never been fair. All right? It's not fair for the ultra-rich. I mean, not fair to the not so rich ones.
Yep.
Because you see, the ultra rich would then use this mechanism, like what Alvin was saying. Let's not pay myself salary that much. Let's leave all the profit in the company. Let the company pay the tax of, let's say, 24%.
Yep.
Even if my individual's income is already at that 30% level, I still don't want to pay myself salary because I know if I use the company to pay myself salary, I'll pay 30%.
Yeah.
But if I leave it to the company pays 24%,
yeah.
pay me a single tier dividend because I'm a shareholder as well.
Yeah.
And I'm effectively paying tax at only 24%.
Yeah.
You see that? I mean, effectively, I'm paying 24%.
And you can do like millions or ultra
Yep.
millions. Yeah,
I don't have to pay 30,000. I don't have to pay 30%. I mean, especially those ultra rich, right? They're talking
Yeah.
at 30% level, right? So they don't want to pay themselves salaries anymore, right? And it becomes unfair,
Yeah.
I mean, if you're ultra rich and you effectively save that 6%, so then the government comes up with this.
Yeah.
They say, okay, now we need more revenue, but let's tax those rich ones. Let's tax those that have a lot of shares or a lot of investment. They're getting a lot of investments income in the form of dividend. And the government says, okay, you see 24% against 30%, yeah, that's a 6% difference, but I'm only taxing you 2% for dividend tax.
Above 100,000.
So yeah, and only above 100,000. I mean, above 100,000 is not to affect those not so rich ones. I mean, all those regular investors, because if they're gonna impose this on everyone,
Yeah.
that means even if I'm not those ultra rich people, I'll get taxed as well.
Yeah.
So they said, okay, only above 100,000 you get taxed, but you only pay back 2%.
Yeah.
You have 6% over there, but you pay back only 2%,
Yeah.
and that is to contribute back to the government.
But I know that time then it caused a crazy amount of confusion, especially for fund managers. Like unit trust funds today with all retail shareholders, right? I mean they get easily more than 100,000 in dividends, right?
You mean unit trust fund?
Unit trust funds, for example. Then I remember then they kind of backtrack and say no, that it does not apply to
Unit trust.
unit trust,
Yes.
right? If you
Because this is really applicable to individuals only.
Individuals only
Because
lah.
it is only individual that has that tax discrepancy or the tax difference between, like I said,
Correct.
maximum of 30% against 24%.
24%, yeah.
For unit trust is already paying tax at 24%, so
Yes,
there will be no
yes.
difference. So that's why they
Yeah.
don't have to tax unit trust.
Right.
So how was the response in your communities about this dividend tax?
Like I said, those ultra rich ones, of course, they may complain at the beginning, but then again, they think, I know what's 2%, if they are earning like millions of dividend, that 2% doesn't really affect them that
Yeah,
much.
yeah.
Of course, they feel the pinch, but it's not really affecting them.
Yeah.
It is those SMEs entrepreneurs that are really, really complaining because to
Yes,
them,
yes.
you see, SME entrepreneurs, they try to save every single cent, in terms of their
Maximize.
tax. They're trying to maximize their tax savings. And I think earlier we have just mentioned that, if you know how to make good use of a Sendirian Berhad, you pay 15%, 17% or maximum 24% if you use a Sendirian Berhad, as compared to an individual, right? So SMEs have been really using this tool, or I would say this mechanism, to save their tax. So now, I've been saving my tax and now I have to,
Yeah.
翻 2%,
Yeah.
vomit the 2%.
Yeah.
So that makes them feel not comfortable, but well, what to do? This has been proposed and passed, and
Yeah.
it's there already.
Yeah.
But then the original question was why did it take so long to actually do this? Like why this gap, in between the time where you said there was the franking system and then this one?
Because you see, this thing is gonna cause double taxation, and it is indeed a double taxation mechanism. You
Yeah.
see, because when we first say single tier dividend,
Yeah.
it means the company has paid tax, and whatever profit that is being used to distribute as dividend, it has been taxed. So you
Yeah.
should not tax something that has already been taxed.
Unless you're treating it like an income tax then it's
No, I mean, it is an income.
Yeah.
Okay. You remember just now I was talking about the franking system.
Yeah.
You see, the franking system is not a double taxation system because even the company has paid tax.
Yeah.
You have to recompute the tax payable received by the shareholder.
Okay, yep,
you see
yep,
the shareholder
yep,
would
yep.
receive the dividend, you have to recross it back to the amount before it was being taxed. The shareholder has to pay tax again. So whatever tax paid by the company, you claim back
Yep.
entirely, you know.
Yep.
So it's still not double tax, right? But this system is definitely a double tax system because the company has paid tax, you don't get to claim back any credit anymore.
Yep.
But now this income has to be taxed one more time. So it makes the government thinks that, hey, if I were to introduce this, you know, will people say that this is not fair because you're not supposed to tax an income twice, you know?
So it wouldn't be a popular move, lah. In other words. Yeah.
But we know the government needs money. lah.
So right now, single tier tax still stays, right? Do
It
they still
still
call it
stays.
so single tier
Single tier dividend system is still there.
still there?
But this is
This is the exception, lah.
This is in addition to
Right.
the single tier system.
I mean, I just find it funny because they still call it single tier.
But it's not really single tier. It's 1.5 already, lah. Yeah. Or
Correct,
rather 1.2. Yeah.
Exactly, you know?
I mean, dividends that you see today, it still says single tier dividend.
Yeah.
Yeah.
No, I'm just joking about the naming, you know.
Okay, so moving
Yes.
forward,
Okay.
this is something that we've talked about, that Elvin's talked about on his social media as well, which is that, you know, the government is obviously going to clamp down a little bit more on crypto income. And then we know that a lot of crypto bros in Malaysia. And I think what we spoke about during that session on Borak was also that this is not a bad thing.
Yeah.
Because also it legitimizes a lot of this income that couldn't previously be on the books, lah. Yeah, so what was the reaction from your circles about this?
Right. Okay. I would definitely say that crypto activities is still not that popular, you know, amongst
Yep.
a lot of people. And even though there are some people who have been trading or investing in cryptocurrency, they probably wouldn't even tell. They wouldn't even tell us, you know, because they have been always thinking that who knows that I'm actually making this kind of money from cryptocurrency, right? So not many of my clients are actually giving me feedback on this, but I would definitely agree that yes, this is fair. This is definitely fair. Yeah, because if you think about it, yeah, cryptocurrency is just like if I treat it as any other assets, whether it's forex or whether it is stocks or properties, you know, if you treat it as any other assets, yeah, the moment you start trading it, it becomes a business activity.
Income, right?
Yeah, it becomes a business activity, and if you really make money from a business activity,
Yep.
it is only fair that you pay tax because you are really doing trading, right? Unless you prove that nope, this is an investment. So even though the title says income from crypto activities subject to Income Tax Act, not necessarily if you can prove this is just an investment.
Investment. That means so this is always something like in the circles for the investment community. Everyone's also a bit confused. Like, is there clear guidelines? What is trading?
What is investment?
And what is investment?
Okay, now, if you look into the Income Tax Act, nope, it's not stated anywhere. And there's no ruling, right? There's no ruling issued by the Inland Revenue Board. But for so many years, we have been using this thing called badges of trade. Yeah, badges of trade is actually I would say a guidance, for us to determine whether what you have been doing is considered trading or investment. And even if you bring a case before a court, that's what the judge will look at as well. So when we look into badges of trade, there are a few elements, and of course the most important elements that we always look at is the frequency. How frequent are you doing this, right? The tenure, how long have you been holding an asset before you sell it off again? But the most important thing is still the profit-making motive. Yeah, if you have that profit-making motive at the very beginning, the reason why I buy cryptocurrency because I want to make money, because I want to buy low, sell high, then it clearly shows that you are doing trading. But if you say no, I'm buying because I'm anticipating that the price may go up, the value may go up, and I'm keeping it for long term. This is like for future capital appreciation. Then I can still argue this is capital gain. And in Malaysia, well, even though we have capital gains tax already, but not from cryptocurrency.
Okay. So it's, but how do they prove the intention though?
Exactly.
Every investor will want to go in and say, yeah, I want to make money.
And also investing is a form of making money also, trading is also a form of making money also, So
It's a
understand.
bit blurred, right?
Yeah.
Understand. Yeah. So that it all boils down to how frequent and how long have you been holding these assets. This is what.
Frequency and length of time.
Yes. Yep.
So-
And these are the things that we always look at. If you tell me you have bought, let's say, Bitcoin 5 years ago, you have never touched it, right? You have never do any trading, you've never done trading. 5 years later, wow, the price has gone up. You sell, you make lots of money. Well, you can safely say this is a capital gain, and you don't have to pay income tax.
Actually, that's the other question as far as I know, right? How's the government going to track this stuff?
They're gonna look into your activities, your history.
What, your MetaMask, your Luno?
If they, of course, if you use Luno, I think it's easier.
It's straightforward,
for
lah.
them.
Yeah.
But of course, if you don't use Luno, use some other platform. Yeah. The Inland Revenue Board obviously will ask you for your trading activities. They will look into, what are the activities. Of course, you may want to hide, but I of course don't want you to do that. I do suggest you to do that.
Like your wallet address and all that kind of
Yep.
thing.
I mean, you will have history, right? You will have all your transaction
But
history.
would I like, so if everybody stays quiet, like don't say anything,
Mm.
and then suddenly you're 28 years old and then you go and buy a bungalow with cash in Bangsa or whatever.
That is how they catch you.
Is that trigger point?
Most people would say, if I don't inform the Inland Revenue Board, if I don't really tell them, right, I wouldn't voluntarily show them my transaction history, right?
Correct.
Until they come and check, right? But how would they check me? How would they know that I'm a suspicious person, right? It is when you buy an asset. It's definitely there. Because once you buy an asset and you got it registered in Malaysia, for example, you buy a real property, it has to be registered with the land office, right? And when the Inland Revenue Board was informed, right, when they are being informed that, hey, this person has purchased this property, very simply, they just do a random check. Not really random check, they just do a check in the Inland Revenue Board system, the income tax system. Has this person reported income that is high enough for this person to buy that kind of real property?
Yeah.
If they find out, hey, it's a mismatch,
Yep.
the first thing is they'll come to the taxpayer and ask, okay, where is the source of income for you to buy this?
Yeah.
And you have to start explaining, like if you say, oh, I earn it from crypto, right? Let's just say, okay, then of course they will ask, why have not you reported
Declared.
this, or declared this as your taxable income?
Yeah.
Then you have to show more things. Or you probably argue, okay, this is capital gain. Can you show me your transaction history to show that, when have you purchased this and how did you make money? You see, the burden of proof is always with the taxpayer. Yeah? This is something that I always like to tell the audience. It's always with the taxpayer. If you can prove that this is a capital gain, you are safe. You don't have to pay tax. But if you try to hide this and hide that, you say, no, I lost all my transaction record. I don't know where it is already, I can't show you anymore. Then, by default, the Inland Revenue Board would say, hey, you are evading tax, you are not declaring the taxable income, and they will tax you first.
But isn't there a 7-year rule for this as well?
Yes. Okay, what you need to do is you need to keep, the Income Tax Act says you need to keep your records for 7 years.
7 years.
But I would say, if you can keep something longer than 7 years, it's always good. It's always good for the taxpayers.
How long
As
would
long
you
as you can.
recommend?
As long as
Forever.
you have to keep for 7 years, but if you can keep more than 7 years, it's good because it helps you. It helps you. Like if you say, hey, I have purchased this 10 years ago, 10 years later I sell this and now I make a lot of money, they will ask you, can you show me or not? Can you prove to me that you have purchased it 10 years ago?
So are you in a case
And-
for sorry, I'm just curious. In the case of you say burden of proof lies on the taxpayer.
Yes, that's right.
So does that mean that we are guilty unless proven innocent, or you are innocent unless proven guilty?
Okay, it's still always it is still always innocent until proven guilty.
Innocent until proven guilty.
But you see, when you get to buy something and you can't explain the source of income,
Right.
that becomes, you are probably guilty because you're trying to hide. You may
Right.
want to hide something because you're not showing me anything.
Yeah.
Right? So even though we always say, yes, you're still innocent until proven guilty, but now the Inland Revenue Board has found out something, and it seems like you cannot explain what you are claiming, that you have
Sure,
done. That
sure.
so then it becomes, you would be guilty if you can't prove.
Guilty until proven
Okay,
innocent.
so let me just give you a hypothetical to kind of close at least this particular topic. I am a crypto bro. I've made let's say 1 million ringgit from crypto trading. Okay, and I've never declared it before. Okay, what do I do now?
Declare. I would say declare. All right, but of course, okay, this can be. You need to look at.
Just declare lah, cha.
Declare. You need to declare for sure.
It's okay,
just,
one.
yeah, it's just.
I scared.
But okay, let me tell you what would be most accurate things.
Okay.
I mean the most proper way to do this. The
Okay.
most proper way to do is you just look at when have you made all this income, go backwards, voluntarily disclose, all this income that you have earned, since whichever year it is, declare everything and pay up all the tax. There could be penalty, but you can probably appeal for a lower penalty because you are voluntarily disclosing all these income. But of course, I do know some would say, hey, can I just declare everything like this year? I mean, I still declare everything, but everything this year. I mean, this is not correct. First of all, it's not correct. And it may not be advantageous for you. You know why? Because
Your bracket will be higher.
yes, exactly.
Yeah.
If you declare everything in the current year, you were saying 1 million, right? Is
Yeah,
it US
yeah,
dollar
yeah.
or ringgit?
Ringgit lah.
Ringgit lah,
lah.
huh?
I'm not that rich. Yeah, lah. I did okay. Yeah.
Okay, so if you declare everything over here, I mean, 1 million ringgit in this year,
Yeah.
you'll be paying at a very high tax bracket. I mean, you wouldn't reach 30%.
That's great
yet lah,
advice, yeah.
But you'll be at 28%.
So you're saying, let's say if you made 1 million ringgit over the last 5 years, then divide it between the 5 years, then you're like 200,000 per year, lower tax bracket, and then pay the penalty, and it's still not going to come up to as high as if you did it in 1 year.
Exactly.
Right, that's great advice. Yeah.
Okay, so actually this brings me back to I remember now we talk about tax voluntary. Do you remember when the government came out with this thing that
Special voluntary disclosure program? you were
Yes.
saying?
yes
Sorry, no more. This one.
yeah
No more,
lah. Sharp, sorry, no more.
This is the discounting one, is it?
This is like the
Zero penalty.
Oh.
Zero
This is
penalty.
where the like the saman end
Yeah,
of the
yeah,
year
yeah.
you get 50% off.
Yeah.
So they are the grace period for this,
Ah,
right? Of course, government try to raise revenue. I'm not sure about stats how it is, but what would be say if they come up with that special ops again? Promo this kind of, when I tell my friends that are not from Malaysia and they live overseas, that every year we have a discount on salmon, right?
They were
just
shocked, right?
they just laugh because they're like,
It blown their mind.
yeah, their mind complain blown. They're like, what? You mean you can speed and then not pay ticket and then you get a discount at the end of the year? Yeah, that's how it works.
Yeah.
Okay,
11,
so
11.
but I think the main concern, why when we talk, I hear people the main concerns that they're like, why would anyone want to volunteer now, get zero penalty? Because their intention is that okay, now IRB knows and they're gonna just keep every year they're gonna audit me, right? How would that, like, give us an idea how your experience with clients and all, like
You mean
is that
why?
true?
Why do I want to declare now? Why
Declare now
Why don't
and
wait?
then
Is it?
and then they always talk about surface and then after that IRB now knows who I am and they're just gonna keep hounding me, right?
keep monitoring on the future
Is that true?
income.
Would you say that's true?
To a certain extent, I must agree I must agree
Okay.
that once you have declared your income, it definitely will make the Inland Revenue Board monitor you. Like, hey, are you still consistently reporting or declaring your income? I must admit that the Inland Revenue Board would do that.
Okay.
But if you say from now on I'm gonna be honest, I'm not gonna hide anything. No, that's. I mean, it's okay to start doing this.
Oh no, of course, yeah.
That's
But I guess
interesting.
the thing is why they didn't want to do it, even though there was a discount period, is that they didn't want to be constantly hounded, even though they have not done anything wrong.
Yeah, sorry, Zan, let me clarify on that. So you're basically saying, right, that last time when there was a voluntary disclosure, if you voluntarily disclose, it means that the government would mark you as someone who has evaded tax before and monitor you more closely. Is that what you're saying?
Okay, there is no official announcement by the authority, by the
Right,
that they
right.
will do that. There is no such thing.
Okay.
Yeah, but we know that if you have done that, obviously there will be a record.
So this is one potential downside of a voluntary
But
disclosure.
I must also clarify that it doesn't mean that once you have done this, you will be audited like every year.
Every year.
No such thing. Really, because I have got so many clients that have done voluntary disclosure, and ever since they have done the voluntary disclosure, they have been reporting their income, correctly,
Yep.
and they have not got audited.
Okay.
No.
Okay, that's good to
And
know.
and you know what? There were a few that did this voluntary disclosure. I mean, the special voluntary disclosure, yeah. And thereafter, they got audited for those years that they have been that have done voluntary disclosure.
Yep, yep.
And you can just tell the Inland Revenue Board upfront, hey, I've done the special voluntary disclosure for these years, and you have promised you wouldn't audit me those years. And yes, straight away they will just stop auditing.
Oh, wow.
Because this is the promise from the Inland Revenue Board those time, right?
So trust your government.
Yeah, they really don't audit anymore.
Okay, okay.
Yeah, great to know.
Even though it was a different administration
Mm.
when it first came out, right?
Okay, so now let's move on to something that has both a business impact and a consumer impact, which is the no sales tax exemption for goods bought via foreign online portals. Can you clarify what this encompasses? first of all?
Maybe can we just define, right? What is a foreign online portal? Is Shopee a foreign online portal?
Exactly.
Shopee's local,
Is
eBay,
Lazada or all foreign
local
or,
also, but Lazada owned by foreigner.
Yeah, exactly.
But,
So yeah,
but still a local
Yeah.
portal.
Is this going to make like CKD and CBU for like, Lazada and all that, is it?
Okay, I think what really this is trying to tell us is that, whatever foreign online portals, for example, Taobao, that's a very popular
Okay.
online foreign portals, right? So if you buy something from, those foreign portal and you when you buy these goods, it has to be brought into Malaysia.
Yep.
Okay. And they're saying, well, if there is a sales tax being imposed on these goods, because certain goods would attract sales tax when it is being imported into Malaysia. Certain goods would have no sales tax. But it's telling you that, don't think whatever that you purchase online will be exempted from sales tax, because if the goods is subject to sales tax, well, even if you buy it online, you buy it from foreign portals, you still have to pay the sales tax when it's being...
What exactly is the loophole being closed here?
Okay, because right now, probably I'll have to put it this way. What happened, I think it was last year. Yep, it was last year, yeah. We introduced this thing called low value goods. Sales tax on low value goods.
Yep.
Right, LVG. Yeah. So this sales tax on low value goods is actually trying to say that if I buy something online, okay, and it's being brought into Malaysia, whether it's by ship, by air, or even by road, all right, as long as it's being brought into Malaysia, and if this goods is actually valued at not more than 500 ringgit, all right, you have to pay a sales tax on low value goods.
Oh,
yeah.
right.
So that is a 10% sales tax.
Yep.
Okay.
Yep.
So then people will then start thinking, is this only applicable to local, foreign portal? I mean, local online portals, and not applicable to foreign online portals. So now it's trying to clarify that no, everyone will, have to pay this,
Right.
even though it's brought, from the foreign portal.
So even if you bought it from Shopee,
Mm.
but it comes from overseas
Yes.
and it's $400,
Mm.
you'll still be subject to 10% tax.
Yes.
But then at what
41.
point would the tax be applied? Because usually you pay it at checkout, right? Then
Yep. So it is the responsibility to charge this sales tax is with the seller. It's with the merchant. Of course, I would have to agree that if it's a foreign online portal,
Yeah.
it's not easy. It's
Yeah.
not easy to control.
Yeah.
Because
how do you
I mean,
police them?
Yeah. How do I know whether
Yeah.
these sellers have really charged or not, right?
Yeah.
But of course, they are saying that if this foreign portal is selling things into Malaysia, they say they will have a way to monitor, these sellers are selling things to Malaysian consumers.
Right.
And if you have exceeded, I think the threshold is still the same, 500,000 ringgit. Yeah. So all the sales of goods, even from a foreign seller on the foreign online portals, once it exceeds 500,000 as in sales to Malaysian consumers,
Yep.
once it exceeds 500,000, this foreign seller is supposed to register themselves with the Malaysian authority, customs, the
right.
Royal Malaysian Customs Department. They have to register with the Royal Malaysian Customs, and they have to start charging this 10% sales tax on low value goods. So they're saying no exception. They're trying to be fair, whether it is a local seller selling things online, but they brought the things in from overseas, or, this is a foreign seller selling things to Malaysian consumers, and they would definitely ship their goods, from overseas to Malaysia. Everyone has to still charge that. So this news is trying to reassure all the local sellers, this is a level playing field. Everyone has to be fair,
But wouldn't you see it as a bit more enforceable for
I
local
agree
vendors?
it's not easy to enforce because
rather
you see,
than-
like if it's a local online portal, the tax authority can easily,
Correct.
just
Yep.
request Shopee or Lazada, for example, show me, who are the sellers, show me the records, because they have that
Yep.
power to do so,
Yep.
Yeah.
In the Income Tax Act allows the tax authority to request for all this information. They can just say, okay, show me all your sellers, that have been selling goods to Malaysian consumers, and from there they will know,
Yep.
are they charging the, what you call it, sales tax.
Sales tax, yeah.
But can you tell that to Taobao, for example. Hey, show me all your sellers who sell things to Malaysian
Because you have no
consumers.
jurisdiction over them.
Yeah, so I have to agree that the in terms of how do they implement this, how do they make sure that they are really charging the correct amount of tax? It's a challenge. It's a challenge.
It'll be some form of like customs blacklisting or something, is it?
If they
Like
know,
they would say, oh, okay, no, all packages from Taobao, since they didn't reply to us, then we blacklist all the.
the
that kind of
rule
thing.
says this. Okay, now the interesting thing is, when this sales tax on low value goods will be introduced, right? When
Yeah.
it was being introduced, it does say that if any foreign sellers who need to register for this sales tax for low value goods,
Yeah.
if they did not do that, or if they have registered but did not charge the sales tax, these foreign sellers can be penalized. The rules say,
Yeah.
the act says they can be penalized.
But how?
But can they really go there
Yeah.
and penalize them? And what if they don't pay, right? What if
Yeah,
they say,
yeah,
I
yeah.
penalize you on whatever fine, but
Go
I
back
just
to
don't pay
Malaysia.
lah."
And what jurisdiction do they have as well, I guess?
Customs lah, stop the packages lah. That's why I said customs
No, no, I
blacklisting.
think,
That's the
like, what,
only.
What jurisdiction would IRB have in,
Yeah.
say...
They're still using the domestic law.
Yeah.
They're still
Correct.
using the sales tax.
So
Act,
the only
domestic law.
impact they can have on them is like blacklisting them and saying like, okay, they're not allowed to come in through customs or something like that lah.
They can do so, but again, like small stuff.
Yeah,
less than
it's not worth
500,
it, right? Yeah.
How do they stop that?
Yeah,
Yeah.
that's the thing.
So that's very interesting. So
That's-
basically means that this tax, while in practice it makes sense to level the playing field, in practicality it's very difficult to implement.
Agree, I agree.
Okay.
I mean, I don't envy the lawmakers because they have to have almost one size fits all. But it's so difficult because there's so many iterations to...
But I must say that news is really to comfort those local sellers. I mean, trying to tell them that, hey, we're playing fair game.
Yeah.
I'm not just taxing the local sellers. I'm taxing everyone. So they tell them that rest assured, we'll do something. But
Yeah.
what would they do? That's something we have to see.
Yeah. Might not be on the priority list.
So the other thing that I saw that was interesting about next year's budget also is it seems to be incentivizing a lot more local property buyers and disincentivizing foreign property buyers. Is this a new thing, or has this been like consistent with the last few years' trend?
Okay, if you look at the first thing, the exemption on stamp duty for first-time home buyer, it has been there for quite a number of years. I would say easily
10?
more than 10 years.
Oh wow, really more than 10 years
first-
already.
first-
More than 10 years.
yeah,
First time
yeah.
home buyer.
Right.
But of course,
First-time home buyers.
the threshold has been changed, from
Yeah.
time to time. I remember last time it was just 50% stamp duty exemption, for a property value at not more than, I forgot how much. I think it
1
was
million.
like 300,000 or then 400. It keeps on increasing, and now the latest one is 500,000. And the stamp duty exemption now becomes 100% exemption, in terms of 50%.
Yeah.
So yes, we have been supporting, or we have been encouraging people to buy a house.
Of course, yeah.
Buy your first house. Okay, but I must of course again remind a lot of audience over here, because many people got misunderstood with first-time house buyer, or home buyer. They thought as long as I've never purchased one, and now this is my first residential house, and I would enjoy this. No, you cannot own one. You cannot own a residential house before you buy your
So if
first
someone has like your parents transferred one to you,
That's right.
then you are no longer a first time.
Ah,
So
okay,
it's
okay.
so technically it's not first time home buyers, first time home owners.
Yeah, you can say so.
Right.
Actually, they should change the word, right?
Yeah. They should probably
Actually,
change
but
that
this
word.
is
lah.
quite consistent with a lot of other countries as well.
Yeah.
That always encourages local home ownership.
Why
Yeah.
is that from a macroeconomic perspective?
Why is that?
Yeah.
I don't know. I think it probably... Okay, so I think so far, if you look at property general, last 50 years, very few people lose money buying a house and living in it for 30 years. Very few people lose money.
In the last 10 years, probably more lah.
Last 10 years. But I think if we smooth it out now, 20 years forward,
Yeah.
because just inflation. Simple as that, right? Dollar terms, definitely don't lose. Or the perception is don't lose. If you don't factor in interest and blah, 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 kind of thing. Right? So I think from a macro point of view, it always looks like a safe enough asset for everybody. But also it has a lot of knock-on effects for the economy, because when you spur domestic spending, and one of the biggest purchases for an average everyday person will be their home. And because the amount of economic activities that come about from just building a home is quite
Renovations,
significant, quite significant,
furniture,
right? From lights to all the small things.
Yeah.
So you create quite a lot of jobs. So in that
Yeah.
sense, it has a very high kind of productive value lah, if I would say, to GDP lah.
And also, there's this documentary that I watched about how Germany tries to reduce the amount of properties being stored for investment and not actually being utilized by people, because it encourages more inefficient use of urban spaces, right? So if you have a bunch of people investing into urban spaces and not actually staying in there, that is places that, are in the middle of the city, people can save money on transport and all that, but it's actually empty, right? So that's why I think that's why they're discouraging it, so that the properties are more efficiently used. But what about the support to rent to own and build then sell housing schemes? What is that actually? I don't even know.
We'll take a look. Of course, do you want to talk about the foreign property buyers thing?
Foreign property buyers thing,
See,
okay.
that is obviously a move to protect the local buyers.
Yeah.
I think we all know that.
From driving up the price too much.
Foreigners, they come in, they buy properties. I mean, if they buy commercial properties, I think it's okay.
Yeah.
That's why it's only being imposed on residential.
Yeah.
This is only the proposal is only imposed
Also
on residential.
commercial, foreigners, no limit, whatever.
I mean, it's still okay. What is being said over here is that when a foreigner buys a residential property, they have to pay stamp duty as well for the instrument of transfer.
Yep.
So currently, locals, like say citizens, Malaysian citizens, right? We have to pay stamp duty as well, for the transfer of title, but we pay between 1% to 4%, depending on the value of the property.
Sure.
So there are 4 tiers, right?
Sure.
Foreigners, they pay one flat rate, 4%. No tiers, 4%. Yeah, but now, right, 2026 onwards, it will be 8%. That's double,
Wow.
8% flat rate.
That's crazy, man.
Double. So that make the cost of acquisition becomes much higher. Like you pay extra 8%, on that purchase price,
So that means basically a foreign property buyer has to be confident that they can gain at least 8% in the capital gains of their property.
Yes.
So, but this is residential only lah.
Only residential.
So commercial, no. Stamp duty still remains the same.
4%.
4%.
Commercial is still 4%.
Right.
When it's that high, does it effectively
right.
kill the foreign property buyers market?
But like I said, the whole intention here is to protect the residential market.
Yep.
Right? Because I think you probably would have heard a lot of locals, are saying that property prices have been shooting up, and it was probably due to foreigners. Because foreigners have that buying power, right? So they're buying all the properties, without thinking much. So locals would not be able to buy, or they probably, how to put it as, they can't compete against the foreigners. So
But
to stop them or to slow them down at least, right? This is one way to
But I
protect
think
the
it's also a
local buyers.
double-edged sword as well, right? So if you are already a residential property owner, then that puts you at an advantage versus those who have yet to purchase their first property or residential property. Then that puts them at their advantage by applying. So there's no win-win one. I mean, it's someone in this case, when you stop something, you also get the desired effect that prices may be a bit sticky upwards.
Yeah.
But of course, it wouldn't affect commercial property. I mean, because we always encourage FDIs, right?
Correct.
I mean, you want to come in, go and buy commercial properties and do business over here.
So my question here is, can someone with a Malaysia buy second home? Because I don't know, would they be considered a resident here or not? Like, can they then buy, or are they still treated as a foreigner?
Now, I'm not too sure about my second home scheme right now, because I know they've just I think they've just changed it. They've reintroduced this and they've put in some incentives for foreigners, but I don't know whether they'll be affected by this, because this is like generally to all foreigners who are buying a residential house.
Okay.
But unless the Malaysian My Second Home has got a special incentive, that says, okay, you can, be escape from this, or otherwise they'll have to pay the same.
Okay.
But I guess your personal view on this, do you think, if I'm a foreigner coming to do 4-8%, and I want to buy in Malaysia anyway, do you think it really changed the demand?
Change the demand for.
Do you think it really changed the demand for, like, I'm a foreigner and I say, Malaysia value for money around this region, and I want to buy something $1 million or $1.5 million, but going from 4 to 8, do you think it's really going to change the demand?
If put into numbers, let's say if they buy a property that is 1 million ringgit, that's another extra 40,000.
40,000.
Yeah. Obviously, you would say to foreigners, who can purchase property overseas, probably 40,000 is not a lot. And if they know that our property is still very much undervalued as compared to their own country, they probably would still think, well, that's still okay. Yeah. So honestly, I think it will not affect them
Demand too
very
much,
much.
right?
It will not affect the demand very much, but still, it will still affects a bit lah.
A bit lah.
But the good thing is, it brings in more revenue to the
Yeah,
government.
double the revenue, right? Overnight. So if your demand drops 20%, they still get a bulk or more revenue, right? Yeah.
Yeah, Zen, any comments on the other
Rent
two?
to own.
Yeah,
Okay.
rent to own and build then sell.
Okay, rent to own has always been here, all right? I mean, not to say always been here, like it has been here for quite a long time, okay? So the whole rent to own scheme is really supporting those that cannot afford to
Yeah.
buy a house yet, right? So I know it doesn't really say the whole mechanism. Maybe I explain a little bit about the mechanism of rent to own. What it's trying to say is that if you cannot afford to buy a house, you rent first. Now, but when you say you rent first, right, you basically have to get a financial institution to buy the house.
Yeah.
And when this financial institution has bought it, the financial institution will rent it to you. And when they rent it to you, they will say, okay, this is a 5-year tenure, all right, 5-year tenancy. And you have an option to buy over the house. I think after 2 years, if I'm not wrong, I forgot whether it's 2 or 3 years, right, at a price that has been predetermined.
Right.
So
like an option now.
if after that 2 or 3 years, if you think, okay, I would buy over this house from the financial institution, then yes, you are actually buying it back, but you're not buying it from the developer anymore. You're buying it from the financial institution.
Right.
But if you decide that you do not want to do so, you just want to continue renting, just continue your rental until 5-year ends, then you just move on. So it's a good way to support those that cannot afford, but they want to try, buying this in the future.
But isn't that also a good choice for any person, because then the price has already been set, but you're not committing to it for another 2 years, which means that you don't take the risk of, let's say, the property going down in price or stagnating in price.
That's why it's good.
So should everyone do it?
Only if you are eligible to do so, because this is not open for everyone.
Ah,
this is
right,
not
right,
open
right,
for
right,
everyone.
right,
Yeah,
right, right,
It is-
right.
If I'm not wrong, it's probably open to those B40s only.
I
Okay.
wanted to probably buy a third house.
Yeah, with
that's why
my
it's
crypto
asking.
gains,
Yeah, correct.
I have to make them
After
real
you
somehow,
disclose your
right?
crypto gains, so I'll
I have to buy something.
Yeah.
I wanted to buy already, then I scared the government come after me, So
But the
that's why.
last one is very interesting. I would say the last one about
Tax
tax
deduction.
deduction for developers converting commercial buildings. This is very, very interesting. This is probably you ask me, I think it's very strange to have this kind of initiative. But after speaking to some developers, then I know, okay, it makes sense. Because you see, this thing is saying that if you are a developer, and if you decide to convert commercial buildings into residential buildings, which most people don't do that.
Yeah,
I think you would know that most developers would do the other way
Opposite,
around.
yeah.
The opposite, right? You would convert residential into commercial
Yeah.
because commercial buildings makes more money.
Yeah.
But after speaking to developers, then only I found out that actually in urban areas, especially city areas, there are really a lot of commercial buildings that are pretty empty.
So it's a glut.
They're really pretty empty. They don't get to rent out. I think Alvin probably would know, right? They don't get to rent out. Then no business would want to set up their office over there. So it stay empty. But people are flocking into cities. People from all other places, they're flocking to the cities because they want to work here. So they start seeing that, hey, we need more residential properties. Yeah. So this is something really new, I would say. But let me tell you, the mechanism is still not out yet. The mechanism is still not confirmed. There's no laws yet, supporting this. But this initiative is trying to say that if you're a developer and you're willing to do this, I give you additional 10% deduction on all the expenses that you have incurred to convert this commercial building into residential property.
Right.
Actually, this is also a trend that's happening in the US as well, I've seen.
Oh, really?
Yes. So they convert old shopping malls into houses, into residential houses. Yeah. So because it's empty anyway, it's already been built.
Because malls are dying, in a way.
Malls are definitely dying in the US, right? Especially we talk about those strip malls and.
Yep.
I mean, there are malls. You're not gonna get like a Mid Valley every 10 kilometers.
And they're in the city center,
Yep.
These malls, these commercial buildings are in
Yeah.
the city center where we know all the areas in city center are so scarce that you don't get any way to build a new residential
yes,
property
yeah,
anymore.
yeah.
So might as well
Actually,
convert lah.
Now that you mentioned it, there's so many like zombie apocalypse malls now already. You know, Oasis Damansara. I just went there as a zombie apocalypse. SS2, the SS2 mall is also abandoned.
SS2 Mall was
Yeah, it's-
apocalypse for 15 years.
Yeah,
right?
and then the one in the Empire one, the one.
But that one, we have got a new Hexstar lah.
Oh, Hexstar.
Yeah, yeah,
Revive
yeah.
Revive,
So it does make sense, lah, right? In a way.
I mean, yeah. I mean, you know, it'd be pretty cool to live in a mall / house.
Oh, I'm not so sure about that, lah. But
I don't
okay.
know, but
Plenty of parking.
in terms of I don't know, in terms of all the I'm just thinking of all the wiring, the sewerage system, the piping. I mean,
Needs to be done,
shopping
redone,
malls.
lah.
Hey, you don't have toilets in all the
Yeah, yeah,
shops,
yeah,
you know.
yeah.
Toilets is like out there, you know. So
yeah.
I don't
True.
know how it works. But
Yeah.
But I mean, it's a cool concept.
Actually, on this, maybe you can explain to our audience as well how. I mean, this is an example of how taxes are used to influence behavior from a macroeconomic perspective to optimize society, I guess. I mean, in an ideal scenario.
True. To a certain extent,
Yeah.
tax is definitely one way to influence behavior of the right. Yeah. I mean, looking at all the tax relief that the government has always been introducing, the moment they want something to happen, they will say, okay, I give you tax relief if you buy this.
Yeah.
I give you tax relief if you spend on this. That's how they change behavior of all our taxpayers.
Correct.
Yeah.
And what kind
So-
of behaviors have you seen in the long term that the government has been trying to change in the rakyat? Like,
For example, okay, the most popular relief that I always ask people to take advantage of, the lifestyle relief. Yeah. And lifestyle relief, I mean, it's not much, 2,500 ringgit. I mean, currently it's 2,500 ringgit per year. Okay. And there's another additional relief on lifestyle. That's another 1,000. Okay. So if you add up, it's 3,500. So if I were to talk about these two relief, the original lifestyle relief and this additional relief on lifestyle, it covers a lot of different expenditure. For example, if you buy books, you get to claim relief. You buy gadgets like mobile phone, computer, tablet, you get to claim. Yeah, you pay for your broadband, your internet subscription, you get to claim. Now they even introduce, if you go for all these enhancement class, where you go for hobby class, or taekwondo class, karate class, you get to claim as well. Then the additional one, all the gym membership, the sports equipment, all these allows you to claim relief. So if you look at all these, right, this is really shaping good behaviors, of the right, because they encourage you to read, right?
Be healthy,
They want you to be IT savvy, therefore they
Yeah.
ask you to buy gadgets, then you need your internet subscription. They encourage healthy lifestyle, go for sports, go and pay your pay for your equipment, pay for your rental of your basketball, you don't have to pay. Yeah, the badminton court. So all this is really shaping the behavior of right. Yeah.
Would you
Yeah.
say lifestyle and the additional one is 2005 or 3005 or 2005, right? Would you say that's already like for most urban consumers that you already hit that 2005 is 200 bucks a
Yes.
month?
I would say easily 2005. You fully utilize
Most
it every
entrepreneurs
year.
would. I mean, most urbanites would already by default.
Yes.
Right? Internet and phone, and I mean it's very fast, right?
Yes, that's right. That's right.
yeah, and this is the one where like I think pretty much everyone claims one, right? The 2005 or 2005.
Almost everyone, and
Yeah.
almost everyone would claim maximum 2005.
Yeah.
Have you seen anyone who
Doesn't claim.
who got audited by claiming the 2005?
Yep. Of course.
We know somebody.
They
Is
will.
it?
They will
Yeah,
audit
she
you.
told us about it also.
Oh, okay, wait. Let me take this
Yeah.
offline.
I mean, not specifically auditing
Yeah.
that particular relief. When they come and audit, they say, please show me proofs, on all the reliefs, that you have been claiming. And obviously, if you have claimed the lifestyle relief, they will ask you for receipts and invoices.
You remember
Right.
someone asking us for receipts?
I don't remember.
Never mind, later offline I tell you again. Yeah, who
I
it
don't
was.
remember.
Yeah.
Anyway.
Cannot say on camera. Okay, so then talking about lifestyle
Hey,
decisions.
do you want to continue or you want to break?
Yeah,
I need a break
so
or not?
no, we don't need a break. We should just finish up already
Okay.
because you have to
Okay.
leave by 5, right?
Okay.
So I think it's only about 2 more slides only.
Okay.
Yeah, so the next one is obviously no more tax holidays for EVs, right? So I think we talked a lot about this tax as well, seeing as how it's a bit of a strange tax holiday because EVs are obviously like more of a rich man's toy now. But now that we see that the prices of EVs actually going down, it does kind of make sense
True.
for them to continue the tax holiday for a while. I don't know. What are your thoughts on this? Both of you actually from a macroeconomic perspective.
Alexander, go first.
Okay, I'll speak on this as an EV owner.
Oh,
because
you're
I,
okay. Which one, huh?
I have two.
Wow.
I've got a BYD, I've got a Tesla.
Yeah,
Okay.
yeah,
So I'm speak on from the perspective of an EV owner.
yeah, yeah.
I would say the EVs that I have purchased, you know, I was like really the first batch who got the EV,
Oh.
was overpriced.
Yeah.
I must honestly say it was
Overpriced,
overpriced.
okay.
Yes, yeah. Because if you compare the price of the same EV in other countries, it's much lower. It's much
Same
lower
could be said of
overseas.
all cars, right?
Yeah. So you see, when this tax incentive was given, when the tax incentive was given, it was still priced at, you know, such a high price, which is actually overpriced.
Yep.
So the only way to bring this price down, I would say, is to encourage CKD. So that is why the government takes away this tax incentive for CVU cars, but
Yeah.
only allows tax incentive for CKD cars.
Yep.
CKD, yeah.
Because that is how the government is going to really develop this EV thing in Malaysia. You know, for EV to grow in Malaysia, we need CKD. We can't just rely on CVUs.
Yeah.
Obviously, I would also agree that it may be too soon because there are still not many EV brands in Malaysia yet. But sooner or later, you know, we need to take this move. We need to cut this CBU tax incentive anyway. And the government take this bold move of stopping the tax incentive for imported EVs. It is to really push and force those EV players to set up your factories in Malaysia. And we do see, and we know
we are
that
seeing that. Yeah,
they are,
I think
they
we
are
BYD
seeing
will
that
have,
have committed.
BYD,
BYD,
Xpeng.
Xpeng,
Yeah,
they have
yeah,
committed.
yeah.
They are setting up already their factories.
So most likely we'll still see most cars being roughly the same price next year, lah.
yes,
Yeah.
or even lower.
Is there any word on what the tax rate will be?
You mean
for
on
EVs? Like, will
tax-
it be full back up to what ICE is right now, or
that I'm not sure. That I'm not
Right.
sure. But obviously,
I think that's a plan. Supposed
Huh?
to be the plan.
within 1 year?
Well, by 31st December actually.
Oh, okay lah. So now's the perfect time to buy a EV lah, right?
if you want to buy a CBU lah.
Yeah lah, yeah lah.
But
yeah lah.
again, it may still be overpriced, yeah.
If you want to buy an EV lah.
Now I have to ask when you bought your BYD lah. 2020.
It was way back in 2020. Wait, this is 2025 right now.
Yeah,
right?
2025.
2023.
I'm so sorry to hear that. I'm so sorry to
It
hear
was way
that.
back in 2023.
Yeah,
Now you know
because
how,
they
yeah.
cut
how
until
overpriced
oh.
it. Now you know how overpriced
Oh,
it was.
yeah.
Well,
Yeah.
you know, early adopters normally pay premium, right?
Yes.
Early adopters. I
Yes,
mean,
yes.
anything, right? Smartphones or anything. There's always a premium to being an early adopter.
No, but the BYD one was painful, man. I saw the price drop. I was like, oh my gosh, wow.
And people say now is a good time to buy. Lah.
Yeah,
But
yeah,
it
yeah,
could
yeah.
be even lower later, yeah, when CKD
Why?
comes.
Why do you think it could be lower later? Like, oh,
Because
CKD.
CKD.
Oh, right. Okay.
Yeah,
When it's CKD, it's
CKD.
definitely be lower.
Yeah, you don't even have to ship it in anymore. Yeah.
Oh, they should ship the parts in though.
But the parts gets exemption. The
Right.
parts will get tax exemption if it's for CKD purposes.
Right.
Yeah.
Well, I mean, also today as we record this, the long-awaited 800 million R&D project from Brodua.
Was it 800 million?
Yeah.
Wow. I
They
didn't know
just
that.
launched an 80K Produa's first EV, right?
Which,
Homegrown
by the
EV,
way,
right?
looks suspiciously like a Atto 3.
All EVs looks almost the same.
I mean, this one really look, and then the 0 to 100 almost the same as the Atto 3. So the range is almost the same as Atto 3. So I'm like
longer, 0 to 100 is in 7.5 seconds. I thought it was
7.3. 7.3.
You can do 6 point some 6 point below 7 you can do below 7.
You koi a bit already lah.
No, you just have to change it to sport mode.
They have a ludicrous mode, right, for Tesla. Right?
Yeah, it's an interesting market lah. I also was thinking about buying EV this year, and I was like, oh, maybe I just buy CKD next year lah. It's okay. Yeah. Okay, so now moving on to this. This was a circular that you guys have sent to your own
Clients.
subscribers
Yep.
on TaxPod, right?
Yes, that's right.
Maybe you can tell us a little bit more about TaxPod and whether or not
So
people.
free shout out to TaxPod, right?
Well, of course, TaxPod is an online platform. It's an
Yeah.
online platform subscription basis
Okay.
where subscriber gets they get a lot of things. Yeah, we always say that people who want to learn more about tax, we have got a lot of short videos. We call it masterclass video in TaxPod, where you can just watch all the short videos, 3-5 minutes, to learn about tax, learn about tax planning, legal tax planning, how to save tax legally. Of course, we have a lot of live sessions as well. We have got live webinars from time to time. You can attend to all our live webinars, unlimited times.
What's your target market for this? Like, is it individuals or is it more like company owners?
Entrepreneurs.
Entrepreneurs.
Because TaxPod is really designed for entrepreneurs to learn how to do legal tax planning. And we talked about, earlier at the very beginning, we talked about how to make good use of all the business expenses so that you can get tax deduction.
Yep.
Yes, we focus a lot on that. But of course, we do also focus on individuals who want to learn how to save tax as an individual, because we have updates. Every month without fail, we would do live update classes. Of course, live sessions to tell you all the latest updates, so that you know what are the latest things that you can take advantage of, especially, when you're an individual, you want to know what would be the changes in tax relief after the budget 2026 has been announced. Yes, these are things that we would definitely cover as well. So, this is the platform for you to learn like everything you need to know about tax.
Okay. And what's the URL for this?
They just have to go to taxpod.com.my. That is taxpod.com.my.
Just do your Superman.
Oh yeah. This is the one. TaxPod. That's right.
So this circular that you sent out, there's a few highlights as to like YA 2026 type tax changes. Is there any, like, maybe pick 2 or 3 that you think that people should know about here?
What's your top 2?
Yeah.
Your top 3?
Okay, I'll pick 1 from corporate tax, then maybe 2 from individual, because I think most people are probably individual taxpayers. Yeah, the first one is actually pretty important, because that talks about AI. Let's talk about AI. Right. I understand a lot of entrepreneurs would want to venture into AI. They want to put AI, they want to build their AI in their business. Right. But most bosses that I spoke to, whenever I talk to them about AI, they will tell me things like, "Oh, AI very complicated, AI very difficult, AI very expensive." These are the things that they would probably tell me. So I say, we know AI is something that we need to incorporate into our business. It is inevitable. You cannot say I don't want to do business with AI. You got to use AI. But people don't know AI and they don't want to go for training. They don't want to go for classes. They don't want to learn how to use AI. So government is now giving tax incentives to those entrepreneurs to go for AI training. If you go for AI training, you send your staff for AI training. Of course, you must go for those programs recognized by this MyMahe National AI Council for Industry, NAICHI. And if you go for this training, you get tax deduction. I mean, as usual, all staff training gives you tax deduction. You get additional 50% deduction.
50%.
So 50%. So in other words, let's say if this training cost is 50,000, instead of getting 50,000 tax deduction, you get 75,000.
That's all right.
Additional 50%, right? So you can actually send yourself for training, incorporate AI into your business, and at the same time get more tax deduction, save more tax, which is some really good initiative.
Quite significant,
yeah. So that's for corporate. I would say take advantage of this.
Okay.
Now, of course, for individual, especially those with children, those with children, I would encourage parents out there, look into all these relief that has been expanded. Like if you send your child 12 years or below to daycare centers or after school transit center, you get relief. Last time we didn't get this relief, but 2026 onwards, you get relief up to 3,000 ringgit.
Oh, that's significant. 3,000 ringgit.
Up to 3,000 ringgit. I mean, not much. We know that daycare center easily,
cost more than that,
it will cost more than 3,000. But at least it's something. At
Yeah.
least it's something. Yeah. So
but the thing about these daycare centers, like okay, so practically like, I have friends like they send to a not registered daycare center is an nanny, which is 2 roads down, right? So that's always a bit tricky, like because also, it's also level of comfort with kids and all, but that's not that you can't do that, right?
Registered only, right?
It has to be registered, and it has to be registered with the Department of Social Welfare.
Yeah.
Okay. So you gotta first ask your daycare center, ask the after school transit center, are you registered with the Department of Social Welfare? Obviously, it also encourage all these daycare centers to get themselves registered, because then only it will attract people to send their kids over.
So let's say someone who is paying a 24% tax rate or 22% or whatever it is. How much is this worth to them?
Now,
Can you just do the quick math?
I mean, simple calculation. If you have not been claiming, if you were not able to claim this, now you get to claim this 3,000 ringgit relief. 24%, that's what? 24%. Let me just do a calculation. 720 ringgit.
So you
Save.
get 720 ringgit for doing nothing, like except just writing it in your tax form.
Yep.
That's quite
right.
significant.
Yeah. But of course, apart from that, the last one, right, the bottom one that says relief on sustainable lifestyle, that is something that I probably also want to highlight. Because you remember just now I was saying that relief shapes behavior of taxpayers.
Yep.
This is also one way, for the government to do this. Because this thing, the relief on sustainable lifestyle, last time there was only one thing that would allow you to claim this 2,500 ringgit relief. That is to purchase EV charging facilities. Purchase, install, or subscribe to all those EV charging membership.
Yep.
So that point, right, it was really to encourage more people to use EV lah.
Yep.
Because only EV users, would install these chargers, and you get 2,500 ringgit relief.
Yep.
Then they expand it, and now, right, they expand it to you can buy food composting machine.
Yep.
Food composting machine is those things that it's a machine where you put all the food waste,
Yep.
and it turns into fertilizer.
Yep.
So good for people who do gardening.
Yep.
I don't have to buy fertilizer. I can put my food waste into it. And now 2026, they even expand it to food waste grinders. Those that you install in your kitchen sink, right? The kitchen sink where it would you can just throw all your food waste, grind it, becomes very fine, and you can just flush it away.
Yep.
You see, now all this allows you to claim relief of up to 2,500 ringgit. So in a way, right, it will turn into like sort of a discount, to taxpayers. Why do I say discounts? See, if you have not claimed this relief before, now this relief is there for you to claim when you buy, let's say, the food waste composting machine or the food waste grinder. In other words, the moment you buy this item, this equipment, you're gonna save tax the next round when you file your income tax return.
It's effectively a 24% discount on whatever you
Yes,
bought.
exactly. If you are paying tax at 24%, it means I know I'm gonna get a 24% discount for purchasing this.
Why is it CCTV there?
Because CCTV is something that is so-called essential, for a lot of people. Yeah.
Strange place to put sustainable lifestyle CCTV. It's like, composting, EV, I get it, I get CCTV. Like, why is CCTV
You need
there?
CCTV
So weird.
to watch the.
Watch your
It must be-
compost breaking down.
No, it must be for your home use.
Like,
CCTV.
speed it up, then you can do.
It can be any CCTV as long as it's for home use.
Right.
As long as it is for home use. So you see, these kind of things are there to, how we call it, upgrade your lifestyle. Your lifestyle. And at the same time, it will make people not simply throw all the food waste. They will just make good use. You can make good use of the food waste to make it into fertilizer.
Yeah.
And it will reduce clogging. When you have the grinder, it will reduce clogging. And so these are things that will actually shape different behavior.
Solar got
No, not at the moment.
That's a weird
I hope
omission,
the
right?
next
Yeah.
thing- I hope that
It's
things
really
are-
weird that they don't have solar.
Yeah, I don't know why solar isn't there
Yeah,
because there are other
unfortunately
incentives
not.
by TMB and all that. Yeah.
Maybe I
Interesting.
should propose to the.
Yes,
Yes, please.
To the
Yes, please.
ministry.
Yeah.
yes. No, I mean, only if it makes sense, because it's all about
True.
sustainable lifestyle.
Yeah, true. I agree.
Yeah. And then these tax incentives and indirect taxes, is there anything that you want to cover?
Well, of course, indirect tax. We always say income tax is direct tax, of course.
Yeah.
Indirect tax actually covers things like sales tax, service tax, import duty, excise duty, and these things. This round, when I look at this indirect tax, of course, the first thing I think we have discussed that before on the stamp duty
home buyers,
exemption for first-time
Home purchases.
Yes, right. But of course, the other things that is on excise duty, import duty, it's really to again change the lifestyle of taxpayers, like the excise duty on cigarettes, tobaccos, and alcohol.
Yep.
All the excise duties have been increased with effect from 1st November.
Yep.
And strictly speaking, it is to discourage smokers, to smoke more, discourage drinkers to drink more.
Yep.
So that is the reason why they increased the excise duty.
But can we really discourage drinkers to drink?
That we have
Hey,
to
work for
ask
you, what?
drinkers and
I mean, I don't drink anyway, but anyway, it's always funny because when you look at the data, does not support that. It actually discourages.
So
if
you see,
volumes go up,
So when it cannot discourage, it will bring more revenue for the government.
Definitely, no. It's revenue raising.
A sin tax, right? Because everybody needs to sin, right?
Yeah.
Okay. And the last two things that we wanted to talk about, we just wanted to run past you because this is obviously something that I feel that you would probably be a lot more experienced with. So we posted this on social media on Alvin's page about a month back, basically saying, is it actually a good decision to buy a company car?
So maybe we give you a scenario, right? Okay. So maybe you're an entrepreneur, you run your own business, and you know, we always get this. Everyone says, "Oh, I have to change car every 5 years. I have to."
Yeah.
And why? I said, "Oh, to save tax." Like, and they always buy through a company instead of personal, right? So I mean, of course, we're not talking about multinational conglomerate kind of thing. Just, you know, average entrepreneur, Sundram Bahat. Does it actually save?
Okay, if you really need to buy a car, put it this way, if you really need to buy a car because the car is old, it's time to change, yes, I agree, buy under company's name because yes, you get to claim some tax allowance. Yeah, we call it capital allowance. Yeah, because when you buy an asset for a company, asset will not give you tax deduction immediately because it's not like usual expenses where we call revenue expenditure, where you pay salary or whatever, you straight away get the tax deduction for whatever that you have paid. But for assets, you get to claim capital allowance, which is something like a depreciation, which you claim over a few years.
Yep.
Okay, they give you a certain percentage and you get to claim over a few years. So if you really need a car, if you buy it using your personal name, obviously you get nothing, no tax advantage at all.
Correct.
No relief, no deduction.
Correct.
But if you put it into your business and it is for business use, then business gets to claim capital allowance. That means you save some tax for the company's tax. Yeah. Now, but I always say this: what if you do not need a car? I mean, you don't need a new car. When you do not need a new car, and you just want to get this capital allowance, yeah, and you buy a car just for the sake of getting that capital allowance. You think about it, you have to pay money to get a car, you know.
Yeah.
It's not free, you know.
Yeah.
Right? You may save some tax, but at the same time, you have forked out that money to purchase a car. I mean, is it really worth doing that or not?
And it's a depreciating asset as well.
Yeah.
We all know.
And it's only new cars, right?
If you can buy a used car, you still get to claim capital allowance even if you buy a used car.
Okay.
But the point here is you have to fork out money, you have to pay money, and the capital allowance is not like 100%, you know, on, okay, the capital allowance will translate into tax savings, but the tax saving is based on what's the tax rate that you're paying. So even if you say I'm paying 24%, yes, I get a 24% so-called discount, but capital allowance has a limit. Let me tell you, there's a limit.
100,000, right?
For used car, limit is 50,000 only.
Right.
Oh.
New car, depending on the price of the new car. If the price of the new car does not exceed 150,000, maximum is 100,000.
Wow.
So let's say you buy a 70,000 new car, yes, you get 70,000. You buy a 120,000 new car, you get 100,000 capital allowance
Yeah,
only.
got it.
But if you buy something exceeding 150,000, let's say 200,000 new car, 50,000 only. So if you buy a
I didn't know
300,000
that.
car, you get 50,000 capital allowance.
Oh,
that's all.
really?
So it's discouraging you from buying more expensive cars,
Yes, you
which is good.
You don't get the full amount.
Yeah.
So that's why I always say, yes, you may want to save tax, but think about the reason why do you need to buy a car. Is it really a need?
Yeah.
If there is no need, just for the sake of saving tax, yeah, don't do it. I would say don't
So
do
it
it.
can be quite silly also, actually.
Because
okay,
you,
so
because
I
you may
mean-
be saving tax, you know, at one side, but you're paying money to get a car.
Yeah, exactly.
Yeah.
Yeah, exactly. Okay, cool.
So then we have two questions from our readership as well. So one of them was about the tax exemption for audited accounts for those Sendirian Berhad making less than 3 million. Would that be a bad thing for investors?
I think Alvin has to answer, right?
Bad
Would it be a
thing
bad
for
thing for
investors.
investor?
I mean, if you have investors, you better get audited, yo. I mean, unless you are your own investor, then it's just less work for you, lah, in a way, lah. For the audit portion. That's why it's saying it's Sendirian Berhad, right?
Yeah.
Berhad.
For
Sorry,
some-
what is this exemption? I'm not familiar with
Audit
this.
exemption. Okay, what happened? What happened previously was that all Sendirian Berhad has to be audited.
Correct. Yep.
Yeah, we need to engage an external auditor, a
Yep.
licensed
Yep.
auditor,
Yep.
to audit your account to make sure that whatever that you report in your financial statements, they are all correct.
Yep.
Yeah, but we know that some companies, they are probably very small companies. They probably don't make a lot of money, and they're not. Then there are no investors into this company. These are all
mom and pop lah.
Yeah, so why incur that cost, to get auditors to come and audit these accounts? So therefore, the Companies Commission of Malaysia (SSM) is putting in all this exemption to say if your company is not big enough, it's okay, no need to audit. You don't have to audit, but you still submit your financial statements to us, submit it to SSM.
So you just don't have to pay an auditor to put their stamp on it, lah.
That's right. You do not need an auditor to audit. But again, you ask whether this is a bad thing for investors. If you have someone investing into your company, without this your account being audited, how
would they know, lah?
Truthful
Yeah,
would
correct.
your numbers
Yeah,
be?
exactly.
The investors will be thinking, you can declare whatever you say.
Correct. Correct.
No external party is actually checking, right?
Yes.
So I would say yes, it would be a bad thing for investors because the accounts are not audited, because they probably cannot trust, whether you're really making money or losing money. Now,
So then, do you think that threshold is a good threshold, or it should be even lower than that? Let's say 1 million or 2 million.
If I'm not wrong, it's starting off from 1 million to 2 million, and of course, in the end, it will be 3 million.
So it's
they're
over
going
years.
stages. Yep,
Right.
they're going stages,
Right.
But in the end, it will be 3 million. In the end, it will be 3 million.
Right.
Yeah. So you ask me whether 3 million is small or big to investors. Well, I think you probably want to invest into companies that make more money than this, right? But of course, if you say you want to invest in a company that makes only like 3 million or less,
Startup lah, I guess. Yeah.
maybe you want to look at whether they want to do a special audit, whether these owners of the
Yep,
company
yep,
or
yep.
the directors of the company want to do a special audit. I mean, they can still go for special audit, to just show the investors that
Yep.
these are audited accounts,
Yep,
even
yep.
though they are exempted. So it's not to say that if they are exempted, they don't have to do this at all. They can still do it if they want to.
So from a real life implementation kind of thing, so I still have to pay my accountant or whatever to do my taxes and all that. It's just that I don't need to get the auditor company involved at all.
Yep, that's right.
So the accountant themselves submits the taxes for me, and then that's it already.
They can submit the financial statements
Financial
to
statements,
the SSM.
Yeah.
Yep.
And of course, tax, it depends. Like when you want to get a tax agent to do it, most of them will do.
Yeah.
Most of them will get a tax agent. Or if they are capable enough to submit their own tax return, they can do it on their own.
So realistically, how much is this saving an average company that makes, let's say, 2 million ringgit?
Based on the market rate right now, a 2-3 million ringgit company would probably have to pay audit fee at about 6,000 to 8,000.
Okay, that's not bad. I mean, that's a pretty decent saving. That's someone's salary for a month.
Mm-hmm.
Yeah. So that's
poor accountants.
Yeah.
Auditors,
yeah.
right?
Well, auditors will have to change the ways of them doing things, because
Yeah,
you see, it's a good and bad thing for auditors, because as the role of an auditor, I'm not supposed to give you financial advice. I'm not supposed to tell you how to do business. Oh.
Yeah.
Okay, you see, as an auditor, because I'm auditing your account, I'm not supposed to tell you all the business strategies. I'm not supposed to give you advice on accounting. I cannot. I can only be an external independent party to check whether whatever that you report is correct or not.
Yep.
But now that you say, hey, the company need not to be exempted, the auditor can also change their role to be advisor. I can do advisory job, to tell you how to improve your business operation, how to, do your accounting properly, because auditors are not supposed to do so. But I'm not your auditor anymore, right? Because your accounts are not being audited. So it's a good and bad thing for auditors. So you may say, yes, auditors may lose that part of the income, but there can be another source of income for auditors if they are going into advisory jobs right now.
Yep. Okay. So that's
Skill,
yeah. And then this is the final question actually for today, and then after that, hopefully we'll wrap up lah.
Okay.
So this is about e-invoicing. So this is from a sole proprietor taxpayer, which is I'm also a sole proprietor taxpayer in some ways. Is it required to register for e-invoicing for expenses that they paid and e-invoicing for shares that they bought? Because also sometimes now when I'm doing something else, then somebody will ask me to put in my e-invoicing number, which I don't have right now as well. So is it a requirement or not?
All right. Now, when it comes to e-invoicing, whether or not you need to implement e-invoicing depends on your revenue. Your revenue. You have to really look at your revenue.
Yeah.
And the simple threshold is 500,000. 500,000.
Yeah.
Okay. If your revenue is at least 500,000, you have to implement e-invoice. Yeah.
Okay.
And the last phase is 1st July 2026.
Yep.
So if you say, my revenue is 500 over 1,000, 600 over 1,000, you still have to do e-invoicing from 1st July 2026 onwards.
Yes.
Yep.
Okay. So now once you have to implement e-invoice, then all the sales that you make, whatever transactions that you are doing when you sell something, you earn income, you have to issue invoice. You have to, right? Of course, it can be a individual invoice, can be consolidated invoice. Of course, that one I wouldn't go in that, but you have to implement invoice. Yeah. But as for expenses, yeah, because here you say, do I have to register invoicing for expenses I paid? Now, the expenses that you incur, you basically don't have to do invoice unless it falls under the categories of self-billed invoice. There are 9 different scenarios here that require you as a buyer, when you pay for certain expenses, the seller will not issue invoice to you. You have to issue this thing called self-billed invoice. I give you one example.
Oh, right, okay.
If I buy something from a foreign seller, whether it's service or goods, yeah, right? I could have gotten a invoice. I could have gotten an invoice from the seller, yeah, but that is not sufficient. Under the invoice rules, if I have to implement invoice, after I have purchased something from a foreign seller, I have to issue a self-billed invoice to record this.
Yep.
Because that
Yep.
foreigner is not a
Because they will
invoice.
not issue you invoice. They are not, registered
Within a
in
Malaysian
the
system or
invoice
whatever,
system.
yeah.
Yes. So
Yeah.
you have to do it. Yeah. So that's one of the scenarios. Of course, there are 8 more scenarios which probably I don't touch that. Yeah.
But that's a good example.
So when it comes to this, do I have to register invoicing for expenses? I would say if it's something that you need to do self-bill invoice, yes, you have to do it. But if it's not something that requires you to do self-bill invoice, just wait for the seller to give you whatever document. If the seller needs to do invoicing, the seller will give you invoice. If the seller does not have to give you invoice, then the seller will give you a normal invoice or a normal receipt, and you can still use it.
Yeah.
You don't have to do anything. Yeah.
Yeah.
As for shares, if you are a sole proprietor, that means you are buying shares as an individual, right? Because you basically, like I always say, sole proprietor equals to individual. So when you buy shares, you buy listed shares, no invoicing needed. It's specifically exempted in the invoice rules. No need to do invoice. But if you buy non-listed shares as an individual, you're also exempted from invoicing. So good thing to be an individual, because all the buying and selling of shares exempted from invoice. Yep. So that's a good thing for sole proprietor. lah.
Very good to know.
Okay.
Yeah. Okay, Zen, with that, thank you so much for joining us today.
Yes,
Okay.
thank you
Yeah.
so much. Yeah,
Great.
it was great having you. Maybe we should do it yearly.
Yeah, get you in once a year to talk about this. Yeah.
Okay.
Because there's so many changes, right?
True. Every
And,
year, I think especially after budget. Budget
budget.
budget announcement is definitely one major change that it would affect a lot of taxpayers.
Okay.
Because we always have new proposals coming up. It could affect your business. It could affect your you as an individual. But of course, if you do not want to listen to podcasts, you can go to TaxPod.
TaxPod, yes.
Yes,
Go to taxpod.com.my.
Yes.
Taxpod.com.my.
And in fact, next year, I think, why don't we just make this a tradition? You come at Santa every year. Like Zenta, or whatever you want to call it, right? Because it's always Christmas, right? Yeah. Okay.
All right. Thanks, everyone. Happy New Year. Merry Christmas, right?
All right.
Thanks for
Thank
joining
you.
us. And we're wrapping up. Again, thanks, Zen and Chuck,
Thank you, Chuck.
Yeah.
Thank you,
for the
Alvin.
average questions.
Not so average, actually.
See you guys in the next episode of Borak Bursa.
Yeah.
Bye.